Hey guys, welcome to Hero Lab Stream episode 36. Sounds like I'm getting some feedback. Lots to talk about here, guys. We've seen alts, continue their sell-off over the last 48 hours. Bitcoin and Ethereum holding strong. Kind of surprising, isn't it? Today we're going to be taking a look across multiple assets, both Euro, Korean, US dollar, Bitcoin, and see what clues we can find there. Oftentimes the market structures are usually similar, but sometimes you get a leading signal which can help you out in planning your trades across the other pairs. Welcome, Jim, Jonas, how you doing? E-Man 2605, good to have you. All right, guys, give everybody a couple minutes to trickle in here. Intraday, Ethereum, like I said, it's been holding up really well. We're still below these major bearish throwback levels, but above support, right? Range is just kind of contracting here. Volume still continuing to fall. So these aren't the assets you want to be trading, but they are the ones you want to be watching. If we do see an up move here, it would really coincide well with some temporary alt bottoms that we're seeing. It's still very early here, but at the very least, we could see some bounce throwbacks here. I guess we'll just start off here with comp. It's a perfect example of fantastic market structure. Been following this one for a while. Obviously one of the first big DeFi hypes, and you can see here, these perfect support tests. Oh yeah, sorry. I guess I can't just talk, and you guys can imagine through my words. Let's get the screen up over here. Okay. Should be good now. So as I was saying, a lot of market structures are looking really clean right now, and we're seeing a lot of opportunities brewing here. Not necessarily at these exact levels, but very, very soon. So as we can see, bearish throwbacks constantly retested and respected, right? There's just this added confidence. When you see this, the market structure getting respected this easy, it's just added confluence of the trend, the momentum still being heavily either, in this case, the bears' favor, inversely the bulls. So you can see, a lot of wicks here. We've already broken through this support level. So what could a bounce look like, and why is it worth taking? So we're going to be looking for a move back up to these levels. So again, this we're going to be considering this a bearish throwback now. It's broken. There was 4 touches on this thing, so it's a proven level. If we see price come back up here, so let's use a squiggly line. If we see price trickle back up, something like this, so this is going to be your opportunity. If we're still bearish, and we see a bearish price reaction, something like that, this would be your confirmed short entry. This had in fact flipped back to bearish support resistance, and that would be pretty fucking ominous at this point. We could probably be expecting sub $100 comp, no problem, something like that, right? Hopefully at this point we'd be starting to put in some divergences on momentum. So say Stoke makes its way up, and it does make a new low, but it's higher, right? So it would create that divergence. So that's what we're looking for. And unfortunately, look at these lows, right? There's no divergences and momentum on these markets right now. So I'm not convinced of these bottoms right now. I'm going to be monitoring this level, and this is kind of the same case right across the market. DeFi PERP, again, I love using these indexes. Saves me the time of having the chart, 100 different pairs. And we've been tweeting this one out quite consistently. Here's the key. It's still untested, this key daily level down here, right? Around the 1600, 1650 mark. The key level right now that we're watching for, obviously, actually we'll zoom it back down here. Why we were bearish. So this bearish throwback level here, it's still untested. So if we do see a bounce up, that's going to be our target here. And you kind of already see the early momentum 4 hours trying to trickle up. It's unconfirmed on this candle. You still have about an hour and a half on that. But it would either get stopped right back down here. So this would probably be the most the likely scenario. And whatever happens here, this would be your consolidation period, and this would be your expansion trade, right? So if it broke up from here, you'd be targeting these range highs around 2300. And then obviously, right back up to this throwback level, 2,500. However, if this level does in fact flip to bear, then this is the optimal short entry. Your stop would be right above here, right? So, and from here, we would be expecting a actual test of the support level, which so far untested. So keeping an eye on that. Again, these are not levels you want to be shorting, right? Like prices just declined, I think like 15 plus % on this. Yeah, so just under 50, just over 18, 19%. These aren't areas you want to be shorting. You want to be shorting these retests, right? So if you're not already in a juicy short position, maybe you should take a little bit of profit down here. Just hold off, just wait for the next price reaction at the optimal short entries. Again, there would have been no longs triggered off this, right? Because we actually haven't tested the support. So you are risking downside if you're jumping into these trades, right? There's less confirmation, there's less probability on your side. So I guess you could, what are you looking for? You're looking for 6% off that and 12%, right? And you're risking, probably to new lows would be your stop, I would imagine. So you can see like your risk is greater than your reward here in most ways. It's not an ideal trade, right? It's not worth the risk. And again, capital preservation is just as important as capital growth, especially when you don't have the odds on your side. But let's go back, take a quick look at Bitcoin here, guys. Again, not much has changed. The consolidation, the volatility on Bitcoin is on the 30-day average is around 0.88% right now. So historic lows. This thing, when it does pop, it's going to fly with a high momentum breakout, either to the upside or downside. Again, my trading styles are based on confirmations of levels, not trying to predict where a market's going to go ahead of getting those signals. So if we do see the price move above, this 10.9 level here, we're going to be looking for that daily resistance, the bearish throwback level to get retested, that 11.4. And I think, Twitter, a lot of people on this level. If we flip this to support, it's going to be a pretty good confirmation that the trend has been chosen to go up in the short term. Obviously, we're bullish long term. So we'd be looking for something like this. If this came back, flipped to support, right? This to me right here would be confirmation of this level back to support would give me, great confidence that we are about to go, test these highs right here. So that's the most ideal, bullish setup that I can imagine for Bitcoin. Obviously, it can go like that, I guess. But at the same time, the bears do hold this. Like we got a series of lower lows here, right? Yeah, but also, higher lows. So again, it's just not a consolidation you want to be trading. It's undecided, right? So if we do see this bearish throwback get held, what are we going to be looking for? Retest of the daily support. This 10,000 level, pivotal, right? If we move below there, again, there's so much buying interest at these levels. 9,800 to 10.2 is like your key support range right now. If we do bust through here, there's a CME gap at 9,600. You got a nice volume profile. It's the spring of the move. I think we would see 9,100 if we do break down from here. And again, our rule of thumb is the longer the consolidation period, the higher the momentum from when it actually expands, right? We know volatility is low, implied volatility is low, but it's actually still pretty expensive. So quickly, let's take a look. So this is a very clean market structure, right? So a very similar case here on the Korean pair. If you guys were familiar with the kimchi premium back in the last bull run, I think it had at some point 20-30% premium. So there was a lot of arbitrage opportunity there, but a lot of people were looking to the Korean market as a lead indicator. I haven't really seen that. I keep an eye on this from time to time. I haven't really seen that just yet, but just monitoring this degree of the slopes. This is it's a completely different market. It's similar, but it's different. Why? Because you have a really flat bottom here, a flat double bottom. I don't necessarily like seeing this type of market structure. It's just a perfect raid setup in my opinion. So it's very clear what price would do here as well, though, right? And you can see the U.S. chart. Let's compare quickly to the U.S. here. It's a series of higher lows off the support, right? So against the USD, this is actually, in my opinion, a much more bullish chart than say looking at here, even though this is a much, similarly clean market structure. If we move above, again, this bearish resistance here, we're going to be targeting the resistance up here. And interestingly enough, when we had this first move, look where Korea rallied up to, right? Those former highs back in August. I think that's like, looking at Bitcoin, that's the equivalency of rallying all the way back up to here, 13.5. So, when they get the FOMO, fucking Koreans get the FOMO. So keeping an eye on that stuff. And, I had difficulties charting this Euro chart. It's just so messy, right? Just because, look at these levels, right? Normally right here, this consolidation block that we've seen in the other charts, those are the support levels, right? See what I mean? Those are the support levels that they've been trading off of. Look at Euro, just sitting right in the middle of them. Super interesting. But again, very clear to see how you trade this, right? There's no mystery. Any move above here, right? Where are you going to be looking to target? Well, next range, something like this. I don't think we have many Europeans in here, but I know there's a few, so I hear you. This range high here, this range high, and right there, right? So this 10.8, 10.4 level. I know those are euros, but that's the key target that we'd be looking for to get tested on a break of here right now. And then obviously, if we break down here, I think we would inevitably be testing this range here. It's kind of like 72, 7,600 EUR. I don't trade this pair, like I said, but I keep an eye on it. I'm looking for any indication, leading markets, things like that. Moving over here. So this is another thing we'll bring up, guys. This is going to go into the recent, BitMEX, obviously you've seen the problems. They didn't have KYC. They got slammed by the DOJ and CFTC for that. And their premiums have completely gone basically zero. I think they were almost at negative when I was looking at it. So this is the annualized 3-month rolling basis. It just shows the premium price on the futures, the quarterly futures over spot. Look at this divergence. So this is the announcement, BitMEX, getting wrecked here. And obviously, there's an exodus of liquidity. But interestingly enough, it's not as bad as people think. So this is the open interest. And look who's number one still, right? So yeah, there's massive outflows, but that's how dominant BitMEX was, to give you some context. I do think they're going to drift down here. I do think they're not going to be number one. There's just too much uncertainty. Their current legal troubles are going to be long and drawn out, and there's some serious potential time to be had there. But you count on it, they are going to have some of the best legal teams behind them. And this isn't something that should have been a surprise to anybody, right? Like how many one broker is the perfect example of this. They got targeted for the exact same reason back in 2016. That's kind of the shot across the bow for the industry. You saw a lot of exchanges rush to implement KYC, but a lot of these derivative platforms didn't. And here they are paying the price, right? So is there going to be more recourse, more actions taken against other exchanges and companies? Probably. And it sucks short term, for the users and the companies and things like that. But long term, it's good. Why? Because institutionalization needs a clean space, right? So this is kind of like mopping the floor, getting things nice and shiny for the open house before they start rolling out their products and their own platforms, which will bring in the real volume, right? So, it's not totally bearish. I think there's a lot of interesting things going on. And I think this, it's actually diverging larger, which I find super interesting. Usually these are, pretty close together. And so yeah, keeping an eye on this. And I guess this is just really representative of that risk on BitMEX and having funds on there for such a long period of time. So taking a quick look here back to Ethereum now. I know some of you guys are asking that in the chats. Very similar to Bitcoin. It's just kind of in this contracting wide range right now. This is a intraday look at it, just because the range has been contracting so much. What am I looking for? Again, this bearish throwback level. So we got two bearish throwback levels that we are below right now and have proven themselves. So in the interim, well, I need to see this level get cleared. At 349, 350. It was a decent little support level for a while. Broken through, proven resistance. We're below it, made a lower low. Just a wick, right? No bullish divergence off that from what I was looking at the higher time frames. Nonetheless, if the price moves back 350, I think that's going to be a good signal that it wants to retest this 360, 365 level. Depending on what we see there, that will be your next trade signal. And that's the thing, guys. Identifying when there's a trade. It's when it comes to a key price level, you're watching the price action, right? So what could we be looking for in a bullish test? Something like this, right into that bearish throwback. You would be, if you're bullish, you would be wanting this resistance to then flip to support, right? And then you would have enough momentum to continue back up. This is the key level, obviously. It's 395, 390 level. If price closes, you don't want to be taking longs in these areas, right? But if price closes above here, I think we're going to have, there's going to be a lot of open air to be tested, especially at this 440, 445 level. So that's kind of what I'm looking for. Taking a quick look at chat. Jim Reardon says, guys, when you say you set stops, are they mental stops or entered orders? I was always told not to enter stops because market makers might scalp you. For me, most of the time it is entered orders. Again, it's going to depend on the leverage that you're using, of how tight you want to be setting those orders. Again, as I said before, generally I give myself, somewhat of a wide berth, again, depending on the leverage and size. But a lot of the time, if you're taking, like they're right, if you have these equal lows, for example, that's what you're risking, right? Like how many people have their stops right below this level? Probably everybody who's long off this range, right? So that's what I'm saying. It's very easy to run these, and then it could just close a wick, right? So yeah, you always want to be mindful, and that's why I don't like these equal lows and stuff. So that's why you would want to have a wider variance in your stop, so further down. But obviously, you're going to be opening yourself up to more downside exposure, especially if this thing really does, if it really were to move against you, you're probably going to, depending on your position sizing, you're probably going to have some slippage on that as well. So odds of your order executing fully at that level that you set your stop on, probably pretty low, even more so if you're trading, super illiquid markets and stuff. To the downside on Ethereum, I know there's some bears out there. We're going to be looking for this daily support level here. This 310 level, this 300 level, whatever you want to call it. We've had higher lows off of this, so I think that's great. We had our first invalidation of that on this wick, so I think how price reacts here is going to be really important. If we do see a big, so do a little squiggle here. Trademark Nostradamus squiggle for everybody, and then I'll start looking into some of the community requests that are put it on there. So if we are bearish, we could come back up here. And if we see a rejection here, we've already taken out this low, right? I'd be pretty confident that we'd be revisiting this daily support. Now, we could make a higher low right here, like right at 320. There's a nice little volume node to support the idea as well. You wouldn't want to be shorting here like this. If anything, if you're bullish on this range, this is where you want to be buying, right? Between like 305 to 320 area. Other than that, if price did break through, don't chase it, please. Wait for the throwback, and then if you see this level turn to resistance, that's your entry, right? So that'd be your entry, and we'd be looking for down to 280. Why 280? Well, zoom it up. Okay, maybe I'll put it on the daily chart. The zoom is taking too long. It's the former daily resistance. Sorry, former daily resistance, weekly resistance, monthly resistance, if I recall correctly. So again, coming down here, supporting here, I'd be incredibly bullish. I'd be loading the boat. So that's what we're looking for in Ethereum. Again, this is a consolidation pattern that you just wait for. You don't trade this, you just wait. There's going to be so much upside or downside from the break of these levels that why take the risk of trading this contracting range, right? Okay, so quick look at total market cap. I wanted to comment on this because a lot of people are saying, oh, there was a huge crypto bubble, it's popped. No, there was no crypto bubble. It was an isolated, isolated bubble in the DeFi space, right? The market cap went from under $1 billion to 15 billion. But I think that's just early growth, right? It went, the idea went from nothing to being, oh yeah, people think this could be something. Oh look, the market capitalization of the incumbent is $22 fucking trillion, right? Or sorry, 22 trillion. That sounds high. That sounds very high. Maybe it's 22 billion. Yeah, it sounds better. Either way, or 220 billion. Either way, the market cap of the incumbent and potential for disruption is high. So again, I think these are early pains. There was no crypto bubble. In fact, we hardly even moved. We've been consolidating in this 10% range for the past, almost 2 months now. What bubble? But what we are seeing, again, is just bearish throwback on the whole entire sector. So if we see a move back up there, I think we're going to be pretty good. Like, alts are going to be bottoming. Bitcoin and Ethereum are moving up. Everybody's going to be pretty happy again. Engagement's going to be skyrocketing. Yeah, always the market capitalization of the space, probably one of the most important charts to be following. The other really important chart to be following right now is Bitcoin dominance, right? We've seen this thing edging up as markets bleed, which is natural. Bitcoin has held its own. There hasn't been like a massive flood of liquidity into Bitcoin. I think the majority of that has gone into stable coins. I think, what is it? Stable coins are up 5x. Tether's around like 15 billion right now or something ridiculous. Let's see. Yeah, 15 billion. So, the liquidity has gone to stable coins, not necessarily Bitcoin or Ethereum, right? But what we are seeing here, this is a daily, guys, by the way, so a nice high time frame perspective. What's this? Oh my, is that a double-headed inverted head and shoulders? It's possible. So this is a technical setup here. Is it predicting the future? Maybe. We need this range here to hold. This is the key level right now, 57% dominance, right? If Bitcoin's moving below here, it's sad. It's sad times. But at the same time, the alts are back. But if we do see this inverted head and shoulders pattern play out here, and I also like that it's a higher shoulder as well. I think we're just missing the volume profile. Actually, doesn't look too bad. Normally, when we do see a breakout, though, the volume would pick up a little bit. But what would we be looking for here on this? Well, definitely at least a retest of this bearish throwback. If we saw it, cool off a little bit, come back up, claim a higher high, preferably off this level, that'd be great, right? And then move and continue to move up. This would be probably one of the most bullish from market structures that I could see. This is the daily chart, by the way, so this is going into 2021 and stuff. I'm not sure on the timing, but the squiggle looks good at the very least. Reallocation, moving out of old tokens into new plays. Yeah, essentially, like when you have, the DeFi bubble is, the majority of stuff is down 60 to 70%. Let's take a quick look at this, right? So this, again, the DeFi index, great for drawing broad conclusions, right? 50% on the index, but we know, looking at other data, the majority of this stuff is down like 65, 70%. The great lesson I've learned about altcoins is just because something is down, 70%, doesn't mean it's not about to drop another 70%. And that's why I'm never really in a big rush to catch any of these falling knives or anything, right? I'm looking for more of confirmation of a bottom rather than trying to predict it. So, Uniswap PERP is a great example. We break this range here. It's actually not too bad of a candle forming right there as well. Could see it bounce back up to these levels. We'll quickly go over that actually. So, where's your stop and validation on something like this? Probably off this low with this hammer forming. And we'd be looking for a retest up to here, right? So that's a pretty good move. It's probably like 10, 12% off my head. And then depending on what, again, this is when you're wanting to be paying attention, because this is going to dictate if we're going to see a short to mid-term trend change back to the bulls, or if we're going to see a trend continuation. And normally when you have these bounces and they start to get exhausted, so if we see, a bounce across markets on lower volume and stuff into these key levels, more often than not, they do get faded back down quite aggressively. So that's what we're going to be looking for, is watching the volume on these pushes and watching for price reaction at these key levels. If we see rejection, and I'm very confident we'll go and take these lows, right? But if we see the volumes, moving up, right, that signal, buyers are coming back into the market, and we do see a break of this, right? That would be your first indication that the bulls are back, momentum is in their corner, the probability is to flip to the long side. This would actually set up a really great chart pattern, another inverted head and shoulders there, and then you'd be expecting a retest of the bullish throwback. This would be the scenario where Bitcoin dominance gets wrecked, by the way, or continues to get wrecked. Take a quick, so this is probably one of the most important charts to be watching right now. ETH BTC. How many people have been claiming head and shoulders on this? It's a lot, but nonetheless, it hasn't broken support. So you can't be bearish on, just because something looks bad doesn't mean it's going to break. So we need that confirmation. I've already mapped it out here. If we do see a break of these lows, right, I think it's going to be good for an 8% trade. That would really line up with the Ethereum move as well. But again, is this a spot you want to be shorting? No, it's not. If you're bullish, this is where you going to want to be getting long, right? Your risk is significantly less. Let's take a quick look here. Say you're taking a long here. What's your risk? Less than 3%, right? And we're if this is really the bottom, you're targeting at high as the. Look at that, right? That's what I'm saying. There's no point in shorting here. It's much better reward to the upside if it holds. So that is why we wait for confirmation. Anyways, keeping an eye on this one. If it moves down, I think Bitcoin dominance will really fly in that case. And ETH BTC tends to be a leading indicator of where other BTC pairs are going to be going as well, just because it's the second largest market cap. Moving forward, some chart requests. KNC. Let's take a look. We'll use the USD pair. I believe this is Kyber network. Okay, so let's see. So a lot of chart, this doesn't look bad. It's coming into some key levels here. Let's zoom it out a little bit more, see if we can clean it up even further. There we go. So this is the weekly now. Like any good chef in the kitchen, they take time to prepare their chart. That way you can see everything, make sure there's nothing you're not missing, key level or whatnot. Anyways, yeah, it's coming to a weekly level here. This is a really pretty good spot. I'd be only concerned if it's started breaking below here. So that's my oh no level. Label it up. This is what I do. This is my process. Anytime I look at a new chart, I label it up. I always mess that up. So again, these are not levels you're going to want to be shorting, right? Where would you be looking to short if you're bearish? Probably back up here, right? $1. So again, not a level you want to be taking any shorts at. It's entering a weekly potential. It's an untested support level, an untested bullish throwback. But so far, it is making lower lows, but nice wicks up and stuff. It's very early on this, tough to call a bottom just yet. There's nothing indicating a bottom. Like it literally just made new lows on this on this print right now. But yeah, it's not a spot I want to be shorting. I would be looking for longs, if anything, off these levels, with the targets being these resistant throwback levels. So even from here, if you say you're getting long, you're looking for 21%. We know that anything below here, it's not good. It's on leverage, this isn't probably something I want to be taking. Even on spot, it's not something I want to be taking, unless you're okay with that downside, right? A lot of people, they might put their stops right there or something. But again, when you're in these support blocks like this, your price is going to do a lot of wicking a lot of the time, right? There's a battle going on between buyers and sellers. So these are the situations, Jim, where you don't want to be putting tight stops. In the actual support blocks are not where you want to be putting your stops, right? That's where you could be getting, sliced up. Same thing, if it's in a resistance level or something. You need to wait for that confirmation above the levels that the move is actually going against you and price isn't just consolidating and chopping everybody up in a level. So again, if price does move back up, I'm looking for this 109.11 level. If it gets really bullish, 113 or so, somewhere around there. Dots, yes, let's take a look. Still really bullish on this long term. Use the USD here. The Kraken was one of the first ones to list them. For that reason, we use them. All right, so again, not a level you want to be shorting at. This is, we've already pre-charted this one. It's respecting the levels, nice 4-hour support here. Let's zoom this out. I think we've had a few more days data, so it's starting to form up a little bit there. There you go. Okay, so this is pretty clear what needs to happen. So we got a nice range high here, and your range high off here. All right. So what do we need to see at this point? Well, take this on. This is your daily support. If you're bullish, how much time? We spent about a month here. We've tested it multiple times, supported it multiple times. This isn't a great. This is a great spot to be taking adding to a long position with your invalidation being below this block. Because if this were to break, I'd be expecting a fall back down here, 2.5 or so. So it's not a position you wouldn't want to be holding that through that. It's a significant drawdown. So again, if you're buying in these levels, you have to keep your invalidations right below these levels. Otherwise, there's so much gap there, right? Can't take that. You got to take the early loss, right? If we do hold here, though, what are we looking for? Well, we'd be looking to get these ranges right here tagged, right? If you draw this line over, it goes over here. So there's also the impetus for this entire move up here. So a lot of price history at this level. It's going to be a magnet. That's 4.5. So your first upside target off these lows is 4.5. Depending on what you were to see here, so if we did see price come back down a little bit, this is a great volume node there as well. Your former resistance of where we last cliffed off of on that daily. If we saw support come in here, this would be your confirmation to either get long if you're not long off here, or adding to it if you are long off here, right? With your invalidation being on these lows. From that, you'd expect to break these ranges here and a pretty aggressive move back up to around 5.5, right? Probably get some rejection off here. Pull this over nastily. And then if we saw, consolidating like that, forming a W, higher lows or something, and then further back up. So something like that is what I would expect. Crypto really loves these patterns, right? The Wyckoff accumulation zones, blah, 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 the markup, the reaccumulation, the markup, right? Reaccumulation, markup, generally distribution, markdown, redistribution, markdown, right? These patterns, probably one of the most consistent patterns that you see. They form heads and shoulders invertedly as well. Let's see, open interest, yes, thanks for answering that. Let's take a quick look. I think I skipped over this at the top of the hour. The DIX, well, I'm gonna go to the US dollar here. I love my US dollar theory. And it's not dead just yet, boys. So we did have completion of that inverted head and shoulder. Oh, this is really messy. Let me clean this up, turn off some indicators here. Okay, so we did have completion of this inverted head and shoulders pattern. It drove right up into our target, this bearish throwback level. So that's cleaned up, right? Bears would say if this did want to tank, everything looks good from a market structure point of view. I agree, right? But again, my outlook is a little bit more, long-term thinking. And right now, this key level here at 1235 is what I'm watching to hold the support. We're already seeing it, right? As long as this level holds, this is just reloading, in my opinion. So the bulls, we're going to be looking for something like this. It's very clear of how this would play out. Again, we'll look at this breakout, the perfect Wyckoff retest. We could see something like this. If I see this pattern, it's game over for the bears, in my opinion. I think we'll see price drive up to this 12.2 level. And again, as I've said before, this would catch a lot of people offside, right? Assume volatility in the VIX is spiking, the euro would be getting wrecked, commodities would be getting wrecked, crypto would probably be getting wrecked as well. We've seen how strong these correlations are, guys, especially to the S&P. But this is what's really interesting to me, and it kind of throws a wrench in my bearish thesis as well. I'm going to explain why, but I'm going to use a higher time frame chart. Okay, I'm going to use a much higher time frame chart. Pull this over. So this used to be a weekly resistance level. Should have been labeled as a throwback. We can call it support now. It's always important to update these things. So this was untested, possible bullish throwback. It's confirmed that now. Okay. So what are we going to be looking for here now? Now that we know why this level is important, look what's forming. I think this is really interesting. And if we believe that the correlation between S&P and crypto is high, then why wouldn't this play out? Right? It's kind kind of inverted head and shoulders. You know, obviously it's rising lows and stuff. And then we got our key resistance right here, 34.40. So this yellow line is the former all-time highs, right? We cut through it no problem once again. So it's saying, you know, really pretty strong momentum. If we see a break of this 34.40 level, you know, I think at the very minimum, you know, we'd probably retest it. We'd probably fly up to 34.80, fly up, come back, retest this. If I saw this flip to support, again, this is confirmation of the momentum and the trade back up to the highs, right? So if you see this level, this huge resistance level that we've been consolidating at, flip to support, that's going to be your signal that we're about to run these highs on the S&P. So that's what we're looking for on the bull side. In this situation, you would expect that, you know, crypto is moving up if the correlation continues, which, you know, it has to this point. So we'll be monitoring that. It's really interesting. If this were to play out, you would be expecting that the US dollar was in fact breaking down. So if we do see a breakdown of this level, you know, in hindsight, it'll be like, wow, the market structure was perfect. We knew it was going to come, right? So if this level fails to be regained, so say we, you know, this is the bullish throwback, we got the response we want, and boom, M double top, there she goes. Or you'd be looking for a retest of these lows, no problem, right? And this situation, this is, you know, crypto is going up, guys. Stocks are going up, commodities would be going up. Speaking of which, let's take a quick look at gold because that's actually really interesting as well. Yeah, we've come back, we've broken this 2-month consolidation range here. Let's get the time thing on this actually. Date range. So yeah, we were consolidating for about 61 days. Broke through it. Sure enough, we get the retest, right? A little rejection off it. And now, what do bulls need to see? We'll get rid of this. They need to reclaim this level, 1920. 1900. They reclaim this level, flip it to support. That's going to be a huge signal that commodities are about to rock and roll once more. So huge level here of what we're waiting for, right? Any, you know, closing above this 1920 level, the bull is on, back in commodities and stuff. Arnold says, do you think like most people that if Trump is elected, market will go wild, or Biden is elected, market's dumb? I think the markets are going to go wild regardless. Now, we can look back at 2016. I think, you know, the volatility going into the results was fucking huge, massive whipsaw, even more so than what we see on like the FOMC meetings. Do you think Trump? So yeah, I think, you know, the party goes on, in my opinion, if Trump gets elected. Biden wants to be a little bit more conservative. I don't know his full all of his policies memorized off heart. I'm not an American citizen. So I can't comment on how the markets, you know, how aggressively they would view a bearish bias. But I think, you know, his approaches are generally going to be a little bit more conservative. So yeah, you'd probably expect not as much growth. I think the coronavirus is, you know, a lot of people have put that out of their heads, but, you know, it's definitely affecting growth. We're seeing deflation in Europe and a lot of other countries picking up right now. You know, the Fed's big concern is deflation. If you look at their comments, read between the lines, the worst thing they can have is high expectations of inflation. Like you can look that you're at the 5-year forward rate in the US. You can pull this data yourselves, guys. Just the Fred St. Louis Fed. But you know they're targeting 2% plus inflation. You know expectations are sitting just under 2% right now. But their whole point is to keep the expectation high, right? It becomes kind of a self-fulfilling prophecy. Like these are his words, kind of repeating what we say, but the markets, again, it's just a collection of participants, the psychology of those participants, whether it be automated, just programmed, or human operators. The point is that things become self-fulfilling. If everybody thinks something's going to happen, it's an invisible foot that pushes it that way, the invisible hand, right? So keep putting out these statements, whether they intend to hit them or not, or if they even can hit them or not, doesn't matter. It's about what people think can happen. Very similar to the value creation that we see in the ICO space, right? People are always hyped on the idea of what it could be, and that's enough for everybody to pile in. So, again, these psychological patterns and behavioral patterns just repeat constantly. You start watching Uni and Sol. Yeah, there's a lot of OTC action for Solana. A lot of people were super bullish on this one. We were taking the opposite side of this. We were kind of bearish. We expected this to be broken, come back into daily support. Well, I can report with great adulation, we are in fact correct. We've hit the daily support right now. This is a key level to be holding here. This is just the first support test, but we did get that confirmation that it was a key level when it did get tested, huge price reaction. So what are we looking for here right now? Well, we need this to get retested. And that's kind of what's happening right now. Accuracy is key in TA. Nobody appreciates trend lines are going all over incorrect blocks. This is the bearish throwback level right now. This is a level that needs to be reclaimed. I'm going to maintain my bearish bias until we, at very minimum, reclaim this level, right? If we reclaim this level here at 2.5, then I'll be confident that the market is ready to move back up. We're seeing that trend reversal, right? However, if we see this get rejected, this isn't a place I want to be getting long, right? Like, you want to be setting your orders in the support blocks. You would have got a bottom fill. So what are we looking for? Well, if it comes back into this bearish throwback level and does see rejection, it's going to look something like this. Lower high, you're going to see volume fucking petering out, and then you'll see the inevitable retest. Is a double bottom going to hold? It's made a higher low. If this gets sniped, I would say the probability is no. If price stops right here, creates that higher low, the probability dramatically increases. This is a very, it's just confirming the level. I would be interested in taking a ride up. I think it would push through this bearish throwback level at minimum to these range highs, right? 2.75. So this would be a nice spring trade in my opinion. So normally when you get these moves back down, boom, hits demand, liquidity, and fucking price runs, moves quick, right? So that's what I'd be looking for there. Again, this low for me now is going to be very key of how I would trade this, right? And again, you're not going to have like these impulses. You're going to have some time if you're setting alarms and stuff. So say, for example, if it broke down from this candle here, that you should be watching this market to watch the price reaction at these levels, because sometimes you only have 5, 10, 15 minutes to get that OTE entry, right? So that's what we're going to be looking for in Solana. Bearish until proven otherwise. And if it does break this daily support, we're going to be targeting these little lows over here. And we can't even really call it support, right? Because it's completely untested. The only confirmation of the level that we have is that it's had a little bullish throwback off of it, which I guess, to be fair, it actually led up to a significant charge up on the charts. But yeah, you can see right here, resistance, flip support, price fucking runs, right? So if we do reject here, boom, oh God, right here, this is, I think this would be a great buy, right? Around like $1.60, $1.70. And at the very least, I think you'd see a retest up to that daily support level. So that's a pretty good trade. I'd be interested in taking that. If it fails, well, obviously, if the majors were to dump, we would expect this probably to get blown through a little bit, just because the momentum would probably be accelerating, right? We're not really seeing that just yet in the volume here, right? It's kind of actually like dribbling down. So is sellish pressure letting up? Question mark. We're going to have to see once it comes into this bearish throwback level. All right, moving on here to the uni. A lot of action going on. Wait, this is the wrong one. This is the wrong uni. Uniswap, here we go. Okay, perfect. So, we called this one pretty perfectly as well through our Twitter feed. We were expecting this level to get blown out. Just wasn't looking strong. Sure enough, it's come into the untested support range. Well, yeah. It's graduated to some support. Nice doji there, showing that the sell momentum was weakening. And we get that initial push that we were looking for up to this key level here, right? Why is this key? Well, here you go. Drawing it off there. It's going to be really determinant of what happens here. Taking it down to lower time frames, you can see this level has been respected previously as support, broke through it. We got the high momentum move down from that, very typical. So what we're looking here now is to see if this does in fact hold as resistance. If it, you don't want to be getting long right here, right? This is literally resistance. But if it does break through, okay, that's an interesting level. That would probably be your first intraday target right up here. This little block here, right? Okay. Perfect. Okay. So let's get out the price ranges. So you'd be looking for, about 11% move, we'll say 11% move off of a break there. So, nice trade off that one. I like seeing these higher lows here. So to me now, this low, if you're getting long, becomes kind of your key stop loss, right? And I say that because there's still, at these prices, these 10, 20 cent movements, while they sound small, are actually very large percentage-wise. So, this could wipe your account if you're not too careful, right, with your position sizing. So, if you see downside here, you're probably going to be looking at a minimum 9, 10%, right? So keep that in mind. And if these lows do go, I doubt this holds. I don't, very, very doubtful that would hold there. But looking for this, if we can get back up here, confirm that as bullish, I think we would get the real bounce. And bounce I'd be looking for is a retest of this resistance up here. It's not untested. It already confirmed itself right there before finally dropping off, right? So it's going to be a huge level. You'd be expecting something maybe like this. Uni's very volatile, so I give it a wide berth. And then a drive up to here. So 3.6, right? So that's a 20% trade. So that's the real move that you're looking for, this expansion move right here, right? Like that's the real money maker, this zone right here, this huge gap, right? Price inefficiency. And you would refill this resistance block as well. Former support, turned resistance, confirmed resistance here. So we know it's resistance. It's going to be a price magnet, right? So that's what we would be looking for there. Again, I guess the theme right now, what we're seeing in alt markets is that, yeah, potentially some early signs, very early signs of reversal, at least at the minimum for bounces, but no confirmations yet of taking that big swing trade, right? All right, taking a look more. What do we got here, guys? Walt, Haka, Pickle, Bot, AMPL. Okay, half of these I've never heard of. Let's take a look at AMPL fourth. I know this thing has had some, why am I looking at KuCoin? Apologies, I do not want to promote KuCoin. Though I do think they added them before. Yeah, actually, this is fine. So this thing is completely 100% retraced. Really not a surprise. Oh God, see, this is why I hate fucking charts like this. I wish they would remove these wicks. I see a lot of this shit on the Uniswap pairs when they first list. Bots just going crazy action on them. So again, we were saying don't get long at these resistance levels. Sure enough, complete fade back down. So it's coming back into this key daily level. You can see it here. Take it off there. This has proven itself multiple times. I think the concerning thing to me about this level, I know there's rebase properties to it. I don't know the percentage it can move away. But the point is that every time it's hit this level, we've boom. These moves have gotten smaller, right? Like I hate seeing that. This really reminds me of like Dogecoin, for example. Actually, we'll take a look at that at the end. So we need to see this 50 cent, 55 cent level hold. Otherwise, this thing could dip. But obviously, the rebase functionality will kick in. Supply would be getting contracted. At the end of the day, like, it can create a negative feedback loop in the short terms, right? Do you want to be holding negatively rebasing coins constantly? Hell no. There's incentive to dump. The fear of downside can be greater than the optimism that a negative rebase is going to rebound price quickly, right? The elasticity idea, I think, plays out for the most part over longer time frames, but in the short term, especially if you're on leverage, you might be shit out of luck. Theta, we've been paying a really close attention to this one. This is a market that just knows no down. However, I think it's at a really interesting level right now. Let's draw it up. I had a beautiful chart already created for it. Well, I guess we'll redo it. That's okay. So again, what are we going to do immediately when we look at a chart? You're going to identify your key throwback levels. These, I always start off with the daily, just a nice time frame, right? Kind of sound like Bob Ross right now. Put on your support. So this is a bullish pullback. It's not tested either, so let's keep that in mind, right? That's why it's particularly exciting. Got a nice little resistance block here. I'm not going to take the wicks like they were. In fact, they're pretty even highs actually. Even right here. If you're on lower time frames, it's slightly lower, but I'm going to use the daily chart. Actually, no. At this point, I'm going to take it down to the full. Yeah. Oh wow, beautiful. Look at that. Okay. And then obviously you're going to draw off your intraday range. So again, equal lows here. This is the level that needs to hold as resistance. Otherwise, some shorts are going to get blown out. All right. So I'd say anything above 78, 80 cents, and this thing is about to rocket once more. It's not something I want to be shorting anywhere in this range other than at these key levels. The risk is just too high, right? Why? Because it's a counter trend trade, right? Like, look at this thing. It's just fucking moved hard. But if you're looking for like an ideal optimal entry and you're patient, you might just get it. See, if we come up here and reject, I think, and we see support, that this is where we want to be looking at, right? The 60 to 55 cent range. This is the key level to be holding. If this market structure wants to maintain itself, this would be your confirmation entry right here. If this, this resistance flipped to support, right off that right there, 59 cents, I'd be pretty confident this thing was going to take another swing higher after obviously doing a little consolidation there. Scribble that out. Again, so your stop loss, if you're taking shorts up here, it's going to be on new highs, maybe like, again, just above this 80 cents. And your target would be around this 55, 66, 60 cents. If you're not taking this trade up here, then your confirmation for entering a short trade would be a break and close below this level. So say price came down, retested it. Right here, that retest of the confirmation of this flipping the resistance would be the confirmation you'd be looking for to take this trade from 65 cents down to 55 to 57 cents. That's about a 12% move, so that's not too bad. With your invalidation being below 1%, that's awesome. I'm glad you're finding some value in them, Jim. Yeah. All right, taking a quick look at Walt then. It's on this one. Are you talking about Walt Disney? We're going into some like stocks here. I'm happy to look at stocks. That's all right. And Disney's at a key level too. Walterium. Maybe we have to pull up the old ChartX Pros. Let's see here. Okay, see if it's a Uniswap pair. And like all the other Uniswap pairs, it's getting wrecked. Wow, look at the volume. Just completely gone on this stuff. Okay. This stuff is going to be tough to chart just because it looks like just a really low volume bleed out. From a technical analysis perspective, like this is going to be your key daily level, right up here, around like 75, 82 cents. Lower down though for any confirmation that this thing was going to reverse. You probably have to see a move back above here, around 52 cents. Again, there's just no volume, right? So it's very difficult. I don't know what the tokenomics are, if it's inflationary or deflationary. So they have a staking deal. So that's another trend. Like some of these ICOs, like Rio DeFi and stuff, they're below ICO prices as well. So there's definitely, people are starting to feel pain. People are saying that there's been capitulation in the markets. I don't think so. If the majority of the tokens are still above ICO prices, we have not entered capitulation. People do not know what capitulation is if they think this is capitulation. Having an algo credit deal. All right. Yeah, like that's the strategy, isn't it, Jim, right now? Identify projects with strong fundamentals. Are they solving problems that not necessarily exist now, but are going to be problems in the future? Those are the best projects and companies to be looking at, right? Because they're forward-looking, and their market's not going to be completely saturated. There's not going to be a lot of competition most of the time, right? They're going to be able to, they have scale in mind when you're that forward-thinking. Yeah, I think you get that. Okay, moving on then. Haka. It's another project that I've never heard of. It sounds like a Uniswap pair though, so I'll keep it on the. Where the hell did that chart just go? Here we go. Haka Finance. That's a good buzzword. Add finance into your name. Yeah, it's just the exact same chart. Like this obviously looks like fucking death. That's a huge Eiffel Tower, but this is the listing price, just about. It's key daily level right here. I don't like that it's just drifting through this. Again, it's just low. Same thing. Low volume stuff. It could easily just chill out here, I guess. If it held this daily level, that would be really attractive. These aren't things you want to. I don't even know if you can short this stuff. But if we saw ranging and stuff, that would look interesting. Now that would look like a bottom to me. Hell, that would be and that's inevitably probably what's going to happen to a lot of these charts. We just saw it, right? Like this is classic accumulation patterns. This is called the rising valley chart formation if you're not familiar with it. So you got one rising, so you got 1, 2, 3, right? It's just rising, and again, usually you get these support resistance flips as well, right? So just adding confluence of market structure, Wyckoff theory, and ideally you'd be around here in your third valley, you start to see the volumes normally going, but then a little spike, and that's your signal that this thing is about to break up. So I see this time and time again. That's why I brought it up. That's what I'd be looking for, but again, I'm not convinced of a Uniswap bottom just yet. I think this could easily fall out, but it's something to keep an eye on for sure. Again, I'm not doubting the fundamental value of it or the cool things that they're working on. It's just sometimes, as Sam from Alameda put it, the markets just aren't ready to go up, right? And that's kind of what we're seeing right now. Yeah, no rush. Exactly. Do I have any other charts? Yeah, so I wanted to go over BNB. Why? It's kind of an outlier to a lot of the market. It really does hold up well for the most part, and especially because they're having such good traction with their Binance Smart Chain. I think I saw a tweet from CZ the other day. They were doing about 10% growth day on day. That's pretty spectacular. If they can maintain that, you can quickly see how that's going to scale in terms of market dominance for them. So again, as long as they hold this untested support here, $24, I think it looks pretty good. Resistance up here around 33, 34. If I can, reclaim this as support, I think it's going to go on a tremendous run. I think a lot of the centralized tokens do well, assuming they don't get run over by regulators. I think that's a growing risk in the space right now. Otherwise, a lot of charts are just looking like this, guys, just consolidating below these bearish throwback levels, above these weekly levels. It's just no trade zones. We're just waiting for expansions of these moves, and then we'll get 20, 30% upside or downside, right? If there's any more chart requests, otherwise, I think we will be wrapping it up for today. RT and I will be back on Friday, same time, and we will see how our predictions have fared in the next 2 days. Thanks for joining the stream, everybody. Hope you learned something. If you liked what you saw, smash the like button, smash the subscribe button, shoot this out to your friends. We just got our new website up as well, so we're going to be aggregating all our material through our website. Okay. And yeah, we've got a lot of awesome education content lined up for you guys. That's going to be launched in the next couple of weeks as well, rolling that out on a fairly consistent weekly basis. The newsletter is going to be continuing to get revamped, more focus on the trends that everybody cares about. And yeah, see you guys here on Friday. Remember, to the moon, to the moon.